Hi, I'm Jen Benepe, and this is The Real Deal. Commercial office vacancies have been fairly steady over the past couple of years. But with the recent fallout in the financial sector, vacancies were sure to rise, and in the second quarter they finally did. Two commercial real estate firms are reporting on that rise in the second quarter, Colliers ABR and Cushman Wakefield, and they both said there was an uptick of 1%. Robert, your latest office vacancy report for commercial space showed that second quarter office space vacancies jumped from 7.8% to 8.7%. What is going on there?
Well, in a word, financial service firms. There are a couple of reasons why financial service firms saw an increase in their vacancy rate. Number one, obviously the financial downturn is occurring, and it's really beginning to affect New York City. We've had Lehman Brothers, for instance, JP Morgan Chase, obviously Bear Stearns and other firms begin to put space on the market, both direct and sublet. Everyone from Newsweek to Ogilvy and a few other media types have moved to less expensive space, and they put big blocks of Class A space on the market. Given some of those movements, do you expect the prices of Class A space to go down a little bit? Certainly. What we're looking at right now, what we're forecasting is a 10 to 15% drop in the Class A average asking rent over the next 12 months or so. So your report also mentioned big blocks of space. Was that financially related or something else? There's a mix. Certainly we see some financial service firms adding space to the market, but we also see firms like Pfizer looking to shed some space in Manhattan. We've heard from other sources equilibrium between landlords and tenants is hovers somewhere between 7 and 9%. So you're saying now 10.7%? It varies. I would say 10% is the cutoff point for equilibrium. We've lost 15 million square feet due to 9/11 Class A space. We've lost 15 million square feet due to residential conversions. And technically we won't be back to our inventory level from 1995 unless everything is completely built out at the World Trade Center. So we're in good shape in the long term. Short term, maybe some issues, but long term I think we're probably going to be in good shape. Mitchell, both you and Colliers ABR put out a report of commercial office space vacancies in Manhattan for the second quarter, and you had a difference in your numbers. You said 7.1% and they said 8.7%. What's the difference coming from?
I believe that Colliers and Cushman just have different inventory amounts, and what happens is that depending on the areas of New York City that they're calculating, the total square footage will determine the vacancy rate.
So you mentioned that also in your report. You said that between 7 and 9%, the equilibrium sort of equated that landlords and tenants would both have power, but when does that tip? At what point, what number does that tip?
We're seeing that the landlords today, there's a additional softness in the marketplace as the sublease market continues to grow. This past up to this half of the year, about the sublease has increased about 1.5%. So what's happening is that that scale is tipping a little bit, and you're seeing that landlords are offering more concessions as well as being a little more flexible in regarding the terms.
Your report also tells an interesting story, rising vacancies and rising rents. That usually doesn't go hand in hand. So what's going on there?
Rising vacancy, rising rents. The space that's coming on the market today is coming at a higher price. And at the same time, we have not had an overabundance of construction. So landlords are being able to maintain the pricing and hold on to it, even though the sublease market's coming on. Again, because of the equilibrium of 7 to 9%, there's no downward pressure to drop the rents.
And your projections for 2009, how much worse will it get before it gets better?
I believe that in 2009 there will still be a softening in the marketplace. There will be additional space coming on the market. But between the third and fourth quarter of 2009, I see a slight increase. And what I mean by that is that the economy should be more in line to tenants making further commitments down the road.
Okay, well, thank you very much.
Thank you very much. I appreciate it.
Thank you for joining us for this Real Deal segment on office vacancies. I'm Jen Benepe, and we'll see you next week.